Let's be honest, the world of insurance can feel, well, super complicated. But what if we thought about it like a game? A game with a clear set of rules, players, and even referees, all designed with one goal: protecting your financial security. Today, we're going to break down the official rulebook for the New York insurance game.
All right, so here's our game plan. First, we'll lay out the game board. Then, we'll meet the players, go through the official rulebook, and find out what happens when someone commits a foul. And finally, we'll meet the referees who keep the whole thing fair.
So first up, let's get a feel for the field of play. The insurance industry isn't just a mountain of paperwork. It's a really highly regulated arena where trust is everything, and your financial well-being is the prize that's being protected.
And here's the most important thing to remember through all of this. Every single rule we're about to talk about exists for one reason, and one reason only: to protect you, the policyholder. The whole system is designed to make it a fair and secure game for everybody involved.
Okay, every game has its players, right? And insurance is no different. You've got your guides, you've got the teams, you've even got visiting competitors. So let's get to know the key people you're going to run into on the field.
The first person you'll probably meet is the insurance producer. You might know them as an agent. Just think of them as your personal guide or your coach in this game. They're the licensed pro who helps you sort through all the options and find the policy that's right for you.
Now, the insurance companies themselves, the teams if you will, they come in two main flavors. You've got stock insurers, which are owned by stockholders. Their main goal? To make a profit for those investors. But then you have mutual insurers, and they're owned by you, the policyholders. This means their interests are way more aligned with yours, and you might even get a piece of the surplus back as dividends.
And this is a great way to think about where these companies call home. A domestic insurer? That's your home team, formed right here in New York. A foreign insurer is like a visiting team from another state, maybe New Jersey or Connecticut. And an alien insurer? That's an international competitor, organized in a whole other country, like, say, Canada.
All right, let's get into the rulebook. How does a company even get permission to step onto the field? Because, not just anyone can sell insurance in New York. They have to prove they're qualified and trustworthy first.
To play in the big leagues here in New York, an insurer has to go through this really strict process. They have to apply to the state, prove they meet all the legal and financial requirements, and only then do they get what's called a certificate of authority. That certificate is basically their official ticket to the game, making them an authorized insurer.
Now this brings us to what is maybe the golden rule of the entire game: fiduciary responsibility. I know it's a fancy term, but it's a simple, powerful idea. It means that when a producer handles your premium payments, they are legally required to act with the absolute highest degree of trust. It's your money, and the law makes sure it gets treated that way.
So, in any game with high stakes, some players are going to be tempted to cheat. That's why the rulebook is crystal clear about the illegal moves, what they call unfair trade practices that'll get a player penalized or even thrown right out of the game. So what are these big fouls? What are the specific deceptive things that the referees are always on the lookout for to make sure the game stays fair for everyone?
Here are some of the big ones that the referees are watching for. We'll get into a few of these, but you can see they all kind of share a common theme. They're all illegal tactics that involve either lying to the customer or mishandling their money.
Okay, let's talk about commingling. This is a huge foul. It's when a producer takes the premium money you paid them and just mixes it in with their own personal bank account. That's totally illegal because that money isn't theirs. It belongs to the insurance company to fund your policy. It's a massive breach of trust that can actually be treated as theft.
Rebating is another big no-no. This is basically offering a bribe. Like, hey, buy this policy from me, and I'll give you $100 back out of my commission. It's illegal because it encourages people to make decisions based on a kickback, not on the quality or the fit of the insurance itself.
And then you've got defamation. Think of this as spreading false rumors in the locker room to hurt a competitor. A producer can't just lie about another company's financial situation to scare you into buying their product instead. The game has to be won fairly, not by trashing the competition.
Okay, now this slide shows a really crucial difference. Twisting is the illegal move. That's when a producer uses misleading info to get you to drop a perfectly good policy for a new one that really only benefits them, like getting a bigger commission. But replacement is the legal and ethical version. That's when a producer advises you to switch because the new policy is genuinely better for you. It all comes down to one question: whose best interest is being served?
So who are the refs enforcing all these rules? And what's the safety net if a whole insurance team just goes bankrupt?
Let's meet the officials who make sure everyone plays fair and who protect the public.
The head referee in New York is the insurance superintendent. This office oversees the entire game. They have the power to investigate, enforce the rules, and if they catch someone breaking the law, they can issue a cease and desist order. That's basically the insurance world's version of a red card. It tells them to stop their illegal activity right now.
So what's the ultimate safety net if an entire insurance company goes under? That's the Insurance Guarantee Association. It's a state fund paid for by all the other authorized insurers, and it steps in to pay your claims if your company fails. It's the final guarantee that even if your team has to forfeit, you, the policyholder, are still protected.
So you see, the world of insurance isn't just a random mess of contracts. It's a structured game with strong rules and powerful referees, all designed to protect you. And knowing these rules empowers you to be a smarter player. It lets you know what to look for, what to watch out for, and it leaves you with the most important question of all. Now that you know the rules, who do you want on your team?